Hello everyone, welcome back to the channel. In today's video I'm going to be going through Wyckoff. I'm going to be doing that by breaking down a trade that was actually sent to the group chat. As you can see, this trade was an absolute killer and ended up running for 200 pips from that initial entry, as you can see, and had a risk to reward of 1 to 18. I am also going to be going through a re-entry for that trade that had a higher risk to reward, so a risk to reward of 1 to 23, but only ran for 75 pips. So I'm going to be going through how to refine or how I refined this entry right here, and also why I entered this higher time frame setup that ran for huge pips. However, before I go into any of that, I have to say thank you all very much for 20,000 subscribers, a major milestone that I thought I would never hit. In order to celebrate that, I have dropped the price of the mentorship. I've been getting loads and loads of requests to do that since I haven't dropped mentorship. I haven't dropped the price of mentorship in a while. So if you want to take advantage of that, first link in the description. For $100 you'll get access to lifetime signals, lifetime access to a community of now 1,500 determined smart money concept traders, weekly calls, a library of recorded weekly calls, so 50 plus hours of calls, and then access to me as well that you can ask. So you can ask questions to me personally at any time. I am also dropping one-to-one conferencing calls, so if you are interested in that, for $500, you're gonna get a 30-minute call with me. You're also gonna get access to a private group with just you and others that have paid for one-to-one calls, and also you get access to the main mentorship group. In terms of the timing, 30 minutes may not seem like a long time, so if you're worried about not getting everything you wanna get covered in those 30 minutes, don't worry. I'm not going to be very strict with the timing. As long as I don't have a call right after your call, then we should be able to run over maybe 40-50 minutes. I'm happy to go until we get everything covered and you're completely happy. We will continue. But now that I've gone through all of that, I'm not going to waste any time, and I'm going to refine, or should I say replay this market back to entry price and start on the daily time frame. So on the daily time frame, what do I look at on the daily time frame? For those of you that watch that very popular video that now is at nearly 300,000 views, which is absolutely crazy, you'll know that the 3 rules, or one of the major rules that we look for, is that we can only trade pro trend. What I mean by that is, if trend is bullish, aka if trend is forming higher highs and higher lows, I'm only going to be looking to buy this market from areas of demand, looking to take this market higher. If trend is bearish, forming lower lows and lower highs, I'll look to enter from areas of supply to take this market lower. So I'm only going to go alongside trend. In this case, you can see very clearly trend is bearish. In the lower time frame, so right here, you can see we're forming lower lows and lower highs. And if we zoom out and look at our external structure, you can see that from 2012 until the present day, the market has been bearish on AUD CAD. So from the daily time frame, I noticed that we were number 1 in a bearish trend. Then what I did was I zoomed in, and I'm going to delete everything off this chart, and I zoomed in and I noticed that we had this lovely area of daily supply. So if you zoom in, you'll see, let me decrease that opacity a little bit because that is very high. Let me make that blue. But you'll see that we have this lovely area of daily supply. The market had not tapped into it, so if I replay back before the market tapped, you'll see that the market hadn't tapped into it. It fulfilled all the criteria that made an order block valid. So number 1, if we take a look at this very next candle, we have an engulfing candle. That is a good sign, because engulfing candles show us volume has entered the market, and volume, or real volume, that causes engulfing candles never really happens unless smart money has entered this market. So this engulfing candle is a very good sign and tells us that smart money has entered this market. We have also had a break of structure. So if you look left, you will notice that this low right here, or the major swing low before the order block forms, was broken below. So you can see that the market breaks below that swing low, if you like, and then starts to return. So what I considered this order block is a POI. So this was an area of interest. So POI stands for point of interest. I considered this area of supply a point of interest to watch this market. I didn't consider this an area that I was looking to enter from, because if we look at our stop loss, that stop loss is huge. We're looking at 100 pip stop losses. I never enter with trades that have more than I don't, the limit for me, the upper limit is 30 pips. However, I don't like even getting close to 30 pips. 10 pips, 20 pips is what I look for. Anything above that is, I'm probably going to look to get lower time frame confirmations. So for this, I definitely wasn't going to look to enter blindly with my stop loss all the way up here, because that's, 100 pip stop loss, which is way too big. I would instead want to see something happen inside of this area, maybe a Wyckoff schematic, maybe an order block within an order block, where I could then look to get entries with a smaller stop loss, and then I could look to ride that wave downwards, and that we could have another push to the downside. So what I did is I set alerts. So what you do is when you have this sort of scenario, you would set an alert, which is very, very easy to do. You would just right click. Okay, I can't do that right now because I'm in replay mode. But if you were in a live market, all you would do is you would right click price where you want the alert to be, and you just click add alert, and there would be an alert when price came into your higher time frame point of interest. When price is inside of your higher time frame point of interest, and I'll just play price so I can get it to that area. When price is inside your higher time frame point of interest, you'll just watch price to see what's happening. You'll be patient because it will take a while, but you'll just continue watching it and watching to see if price can give you an entry on the lower time frames with a smaller stop loss than 100 pips. So all I did was I was patient, and if I play this market, you'll start to notice that we have a textbook Wyckoff schematic start to play out. So as you can see, we have the market go bullish inside of our area, so have a deep move inside of our area, and then start to go bearish. So what we see is a change in momentum. When we see this type of thing happen, understand that a lot of the time it's Wyckoff. So if you drop to like the 1 hour time frame, you'll start to notice areas of liquidity in the market. So you'll start to notice areas of support and resistance. So right here, you'll see that we have an area of retail resistance. So retail traders in this market would be considering this as an area of resistance. And then again, so then when this area of resistance or liquidity forms, market takes out that liquidity. So you can see right here, market takes out that liquidity. But before it does that, it accumulates even more liquidity. So if I just take this to the right a little bit more, you'll see that we have 4 touches inside of this area of resistance. Because of this, because the market has touched this area of resistance so many times, retail traders are going to be considering this area a key level. And therefore, when the market breaks outside, they're going to be looking for scenarios such as break and retest to enter new buys in this market. So above this area of resistance, retail traders are going to be entering buys. This is good for smart money, and I'll just explain this away from the chart. This is good for smart money because where retail is buying, so if retail is looking to buy here, smart money can sell. Because if you think about it, in any sort of market, be it a financial market, a real life market, you need buyers to sell to or sellers to buy from, right? So if I went to an Apple store and the Apple store didn't have the product that I was looking to buy, say I was looking to buy an iPhone, and the Apple store didn't have the iPhone in stock, aka they weren't selling it, I wouldn't be able to buy. So what you need is you need to have a buyer and a seller for a transaction to occur, and price is a reflection of that interaction between buyers and sellers. So right here, if there are many buyers here, smart money will look to sell and that's how any sort of market works. So when retail is buying here, smart money will have their first opportunity. I'm not sure if it's their first opportunity, but they will have an opportunity to sell this market, and they will enter their first shorts. Again, not their first shorts, but they will be able to enter shorts. And that is the nature of Wyckoff, and that's what Wyckoff is. It's the market or smart money artificially creating areas of liquidity in the market to then take it out, induce retail to buy so that they can then sell. So what I say when I mean use your losses to fund their wins is all of the people buying here in terms of retail, they're going to be buying here expecting a break and retest. They're going to get liquidated. They're going to hit stop loss. So they bought here, but the market dropped. So if say their stop loss was somewhere here, they would have hit stop loss, because at the point at which they were buying, smart money was doing the opposite. They were selling. And that's what Wyckoff is. So what you need to understand is at these retail areas of liquidity, such as support and resistance. So in this case, I used an area of resistance, but it can easily be an area of support and then the market liquidating that area of support, getting a lot of sell side retail liquidity, and then smart money using that sell side retail liquidity to push the market upwards. Understand that at those areas there, you're going to have liquidation occur, and you can probably look to capitalize on an order block left behind, the market returning to that order block and continuing higher. So in this case, what I did was I started to mark out this as a Wyckoff schematic. So I call this my, if I make this black, I call this my preliminary supply. This was my area of preliminary supply. If I should make that a little smaller, my buyer's climax. This was my buyer's climax. This was my secondary test, accumulating liquidity at that area of buyer's climax. So we have this high, then that high again, be tested again to accumulate liquidity. Then what you have is your UT taking out liquidity, right? And then we have our UTAD, which breaks structure above that UT. And UTAD just stands for upthrust after distribution. UT stands for upthrust. So this will be that first upthrust, taking out all liquidity that was that formed at that buyer's climax and secondary test level, and then the UTAD breaks structure again. When the UTAD breaks structure, here is where smart money will open the majority of their shorts in this market. As a result of that, the market should and often a lot of the time will break structure. So here what we had was, we had this very interesting area of equal lows. So we had this area of equal lows that the market tapped multiple times, and from this UTAD, so the short that the sell side momentum that broke structure below these equal lows originated at the UTAD, and that will happen a lot of the time, and that's what validifies the whole Wyckoff schematic. So from this UTAD, the market will break structures to the downside below equal lows, leaving behind an order block, and in this case, the order block was right here. So if you look, you'll see that we have this lovely area of 1 hour supply. All other areas from before are either ugly and have wicks inside of them. So this one right here has a lot of wicks that come back into it, or are just not valid. So this order block here isn't valid because it doesn't have an engulfing candle. This is the only valid one, and therefore this is the one that I was interested in setting limits at, and that's exactly what I did. So I set my limits at this price right here. And this was sent to the group chat. I'll show proof of that in a second. But in terms of my entries, my entry was at the bottom of that wick. Stop loss just went right at the top. And in terms of TPs, I'll go through that later. But this was my entry. And if I show us proof that this was sent, and I go back to Discord, and I just Control F AUD CAD, because I do send out loads and loads of setups on AUD CAD, you'll notice right here, if I jump to this setup right here, on the 15th of September, I sent out this setup right here. So if I click it, you'll notice that I have the exact same Wyckoff schematic that I've just marked out with you guys right here. So if you look, you'll see we have the exact same schematic, and I considered this a potential last point of supply. So the last point of supply is the clue's in the name, the last point that we expect the market to test before the market dropping all the way downwards and having a huge rally to the downside. Right, so this was where I considered entries at, and this is where I told the people in the group, or the members in the group chat, to start entering shorts. And if I just show us the results of that, it was absolutely amazing. A sniper entry. It does take some time to get back here, but I'll show you guys. And by there you go, absolute sniper entry. Let me pause this. Absolute sniper entry in drawdown for what's this? 5 pips, and then just drops all the way. I will go into the daily time frame just because it does take a while. But in terms of take profits, I just targeted this daily swing low right here, because below areas of swing low and above areas of swing high, we're going to have a lot of liquidity, and therefore the market is going to be attracted to that. The market, just as a blanket rule, at an area of liquidity, the market is most likely going to want to go there. So what you can do is perhaps look for order blocks that the market is going to go to before it goes to that area of liquidity. So areas of liquidity add confluence to your trade. So this right here, this area of swing low, had a lot of liquidity below it. So what would most likely happen is the market will come to take out that liquidity and then push upwards. And spoiler alert, that's exactly what happened. But if I show us how this trade ended up playing out, was a perfect setup and ended up just dropping straight all the way till take profit. I did have another re-entry open, and I'm going to go through that right now. I'm just going to leave this up here just to give that re-entry a little space. But here was my re-entry. I was looking at this lovely 15-minute area of supply. I wanted for the market to tap and then drop. This was also sent to the group chat. If I show us by going to the watch list for the week and then scrolling to here, you'll see that I had this 15-minute area marked out. It was posted again, as you can see, on the 5th of October, and the dates line up, so no fakery is going on. If you want, I can open this up as well, and you can see 5th of October, and I had this 15-minute area marked out. I like this 15-minute area because if I show us on the 1 hour, there was a lovely area of equal highs or equal lows to take out, and I'm going to show us that on the live chart right now. So if you go to the 1 hour, you'll notice that before the market came back to that 15-minute area, right, there was this lovely area of equal lows. So I wanted for the market to do something like this. I wanted for the market to push upwards, tap into our OB, and then sell down to take out the equal lows. That didn't end up happening. The market took the equal lows first and then came back. Either of those I was happy with, because if it broke structure below the equal lows first, well then it would have given us the break of structure, which validifies the order block. Because remember, the two things that we look for an order block to be valid is, say it's an area of supply, we look for it to have broken some sort of previous structure, and then that very next candle to have been an engulfing candle to show us that there has been a volume increase. And therefore, if we look here, if the market broke structure below these equal lows, that would have made it valid, because it would have had that break of structure that we look for. And then on the 15-minute as well, there was an engulfing candle, so it would have had the two criteria that we look for. So either of those I was happy with. And then I was just patient. I just waited for the market to come back. It did take a little while. In fact, I might have to go to the 1 hour while playing this back, because it did actually take a good while. But ended up coming back. I'm going to have to play this a little slower now. And then just started to drop. So you'll notice on that 15-minute, it started to show rejection. And then that very next candle was a good, very, very nice engulfing candle, giving me proper rejection. However, I don't know what happened. I don't know, perhaps it could have been my broker that didn't fill me in at this entry, so I didn't actually get in from that entry here. That would have been an absolute sniper entry. Would have been looking at a, 10 pip stop loss. However, I wasn't able to get in, so I started hunting for re-entries from that 15-minute area, and I found this area, this lovely 15-minute area that formed as the market was tapping our higher time frame 15-minute area, and I had my limit set there, and I made sure that I got triggered. This I actually also sent to the group chat. So if you look at Trade Talk, you'll notice that a user in the group chat, Voho, asked for me to send out the lower time frame entry if I find it, and you'll notice this one right here, I refined it to the 5-minute, but it's the same thing on the 15-minute. Lovely area that I had marked out. In fact, let me just show us that on the 5-minute. So I had this 5-minute area marked out as the area that I was going to look to get my final re-entry from, and that's literally exactly what happened. The market dropped, tapped perfectly. If I show us, tapped perfectly, and look at that stop loss, 2 pip stop loss, 2.5 pip stop loss, and then from there it just dropped straight till take profit. I'll just show us that rejection a little bit. Ended up coming back and then just dropped. I'm not going to waste your time by showing you it on the 5-minute, whatever that we were looking at there. I'll just show you it straight on the 4 hour. And these were our final take profits, remember, from our higher time frame setup. If you want to see, of course you want to see, it ended up just dropping. Hit take profits, took that liquidity from that daily swing low, and then started pushing upwards. That was the trade. It was a beautiful trade. For those of you that are wondering about my MetaTrader 5 entry, I'll put that up on the screen right now. You can see the price that I was entered at, and if I zoom out and I look at the 5-minute area, alright, and I just replay it back, the 5-minute area that I claim to have entered from was here. So if I show us, and I'm going to show us that it matches up with the MetaTrader 5 entry. The MetaTrader 5 entry is, I mean, I don't have it open on my phone, but you'll be able to see that it lines up with what I have on my chart right now. So 0.91868, and then my take profits were all the way down here. So it was a lovely, lovely setup. I was happy with my profits, and the group members were absolutely happy as well, or that's what I'd like to think. I did get loads and loads of feedback from the group members after this trade. I'm going to put a couple of the testimonials or what the group members thought about this trade up on the screen, just so you can see that, you know, members are happy in the group chat. But yeah, that's all for the trade. It was a beautiful trade. It was fairly simple. In terms of a higher time frame setup, we just looked for a daily order block that was pro-trend, which meant that we were looking for areas of supply. Market tapped into that daily area of supply, gave us a Wyckoff schematic. We entered our first trade from here, which was a lovely last point of supply entry. Then we got our re-entries from here, a lovely 1 to 28 risk to reward trade that ended up hitting take profit very, very quickly. Happy members, happy Mad FX. You know, what else can you ask for? Yeah, and that was that. In terms of anything else, I have made a document, as I do for every single trade, every single video almost on this channel, and this will be posted in the description once this hits 500 likes. So make sure you like, comment and subscribe. I forgot to say this earlier, however, I am also hosting a giveaway right now on Instagram. So if you take a look, I am hosting a $1,000 giveaway because of 20,000 subscribers. It already has 1,000 comments on here. So if you want to have a chance of winning $1,000, all you need to do is go into the description, click the link to the Instagram, come here, at 3 friends, and then you have a chance of winning $1,000. Also, don't forget about that discount. Prices are at $100 at the moment. First link in the description, so you can get access to trades such as the one that I just broke down today. This is not the only one. This week alone, so today is Tuesday, it's just turned Wednesday, it's 2 a.m. on Wednesday, but Tuesday today, if I show us the watch list updates for today alone, it was record breaking today. We had 3 trades all hit take profit, and they all had a 1 to 20 plus RR. So this isn't the only trade where I'm getting sniper entries. This is the Euro JPY sniper entry, and then just drop to take profits. So we have trades like this every other day. It's not something that's happens once in a blue moon. So if you want to take advantage of that, plus the masses of educational content, I don't want to click any of these just because it will have links that you can just type into Google, and then it wouldn't be fair on the people that have paid. But there's 50 plus hours of call recordings. There is a 10-part video course. There is access to a community of 1,500 determined smart money traders. And then also you'll get access to the group signals. So you have nothing to lose, and a lot of the time you'll make all of your money back and then some that you spent on the group within your first trade back. So the first trade that I send out that you take, you'll probably make your money back, the $100 that you spent. So you have nothing to lose. First link in the description. Also, in terms of the one-to-ones, second link in the description if you want to book one. They are at $500 for 1 week. They will be at $500 for a week, and then I'll be putting them up to 1,000. I will have 2 more videos coming up where I'll have more details on that. But if you click that link, you'll be sent to another link where you have a YouTube link that explains all of the ins and outs of the one-to-ones. But if you are interested, second link, and also you can drop a DM on Instagram or on Telegram and I can get you sorted out. But yeah, thank you all for watching. I've been Mahad FX. I'm glad to be back. This winter we are on grind mode, so turn on post notifications if you haven't. But thank you all for watching, and I'll see you all in the next video.